We still seeing strength in the SUI ecosystem?
It's leveled off. It pulled back and then it sort of regained about 50% of the pullback pretty quickly. During the bear market, as things were capitulating, TVL, stable coins, DEX volumes were all going up. And there was there was two chains that were doing that at the time. And the other one was Sonic, which was heavily incentive driven. So the fact that all this activity was happening right into the lows of the capitulation of that bear market was a massively bullish sign. So it massively outperformed.
Exploded out of that bottom.
What's that? Sorry.
Yeah, it exploded out of that low. I mean, it was shocking. It moved so fast.
Yeah. And so then we had the hack and it slowed it down. But it still looks fine for the rest of the cycle.
If we're going from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth, you need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved, and the more blockchain technology gets used, the more it uses the alts for infrastructure rails, for new forms of compute and storage and all the other things that are coming. So I just thought it was interesting because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And then we use the GMI Financial Conditions Index, and that has a 9-month lead. And with the dollar breaking down, even today, it's starting to suggest that this may go even into Q2 2026.
Raoul Pal predicts that the current cryptocurrency bull market could extend into 2026. This prediction is based on his observation of the favorable macroeconomic conditions driving the market. Paul draws parallels between current cryptocurrency trends and the 2017 bull cycle, suggesting that the cycle could last until 2026. He attributes this extended period to factors such as central bank liquidity and a weak US dollar, which create a favorable environment for cryptocurrency investments. Paul's analysis suggests that the current cycle bears similarities to the 2017 rally, which was also driven by macroeconomic slowdowns and liquidity-driven rallies. He believes the market could better manage volatility through investor stability and potential policy changes. Furthermore, the stabilization of Bitcoin ETFs and the maturing infrastructure support the cryptocurrency market's outlook through 2026. Despite significant declines in the cryptocurrency market, Paul emphasizes the market's resilience and urges investors to be patient and wait for the next phase of the banana zone, which he predicts will extend into 2026. Macroeconomic factors such as falling interest rates are driving the cryptocurrency landscape, making risky assets like Bitcoin and Ethereum particularly attractive. Paul's strong conviction in certain altcoins is evident, with over 70% of his portfolio invested in SUI, a testament to his optimism about these assets. Paul's prediction of a prolonged cryptocurrency bull cycle is not limited to Bitcoin. He also expects non-fungible tokens to generate significant returns during this cycle. Paul, also known for his early $100,000 Bitcoin prediction in 2013, advises his followers to focus on owning as much cryptocurrency as possible first, and then acquiring as many NFTs as possible. According to Raoul Pal, this is why you should focus on SUI after Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
As this market becomes much more sophisticated with the type of asset owners and investors that are coming in, they're going to start using fundamentals. And if there is no net worth growth, either in a protocol or in a layer 1 or a layer 2, it's not going to rally just because Bitcoin's rallying.
Because also I think of it as a function of the amount of capital and attention available, right? So like attention times capital, right? That's the whole game in this. And there are so many coins now, ignoring all the meme coins for now, but just generally speaking, there's a lot. So we don't have enough capital to drive all of the speculation and all of the things. So the market has to focus where the attention goes. And so, yes, you'll see pockets of memes doing extremely well because they capture attention and thus capital. But generally, it feels like the mid-tier outperforms Bitcoin, but the bottom tier There'll be cases of things that do because they're new and they're interesting and they get attention. But generally speaking, there's just not enough capital that flows that far out the risk curve.
Paul also highlighted a major opportunity for SUI, a layer 1 blockchain that he believes is poised for significant growth. Paul recently stated that SUI could experience explosive gains after breaking through its key resistance level near $5. Describing the situation, Paul said that SUI is hitting the ceiling and is about to go into hyperspace as it gains momentum. Paul also expressed optimism regarding Solana, noting that it has broken out of a long-term channel and flipped its former resistance into a new level support. He shared his view that Solana's price chart suggests stupidly bullish long-term potential. In his previous comments, Paul described SUI as a top contender in the current market cycle, suggesting that it could significantly outperform Solana. He explained that his confidence in SUI stems from its demonstrated strength against major cryptocurrencies like Solana, Ethereum, and Bitcoin, as well as its significant outperformance across several metrics. While Paul remains optimistic about Solana's future, he believes SUI could be the next best thing, offering unparalleled growth potential. However, he cautioned that such a bet carries greater risk and advised against making large investments without careful consideration. For him, confirmation came when SUI consistently outperformed other tokens, marking a strong advance and positioning it as a key player in the blockchain universe. Paul also noted that while Bitcoin has shown consistent gains, it has not yet entered the long-awaited breakout phase. He attributes this to what he calls a lagging economic cycle. Using his own model to assess the global economic outlook, Paul noted that the cycle still appears to be in its early stages, suggesting that traditional and digital markets may have more room for growth. One of the main factors influencing this extension is the weakening U.S. dollar. The dollar index, DXY, has fallen nearly 9% since the beginning of the year. Paul noted that this decline could be a positive factor for Bitcoin, as the two assets tend to move in opposite directions. According to him, a weaker dollar not only strengthens Bitcoin's appeal as a hedge, but also signals easing monetary conditions in the future. Paul also compared the current situation to that of early 2020 rather than 2021. At that time, Bitcoin fell sharply before beginning a spectacular rally that lasted all year. He suggested that the current market also appears to be in its infancy, with a real acceleration perhaps still months or even years away. During a recent visit to the Middle East, Paul met with several sovereign wealth funds and came back with a clear impression. Regional governments are taking blockchain and AI seriously. According to him, countries like Saudi Arabia, the UAE, and Qatar are not just investing in Bitcoin. They are laying the groundwork to integrate blockchain technology into their national infrastructure. While the cryptocurrency market remains sensitive to global tensions and monetary policy signals, Paul believes broader macroeconomic trends point to a prolonged cycle rather than a short-term peak. According to him, cryptocurrencies are expected to gain traction, but not before experiencing more volatility in time. The next step, he said, will depend on continued adoption and growing institutional commitment in developed and emerging markets. AI and blockchain are the mandate of the entire region, Paul said, urging governments to stop viewing Bitcoin as a mere store of value and start building blockchain infrastructure. While Raoul Pal's outlook remains optimistic, he cautions that this cycle could take longer to mature due to macroeconomic frictions and slower institutional acceptance. If this holds true, the peak of the current cycle could be delayed until 2026, paving the way for a period of prolonged accumulation of growth rather than a rapid and sharp bullish period.